Did you know Nancy Pelosi and her hubby just bought 15,000 shares of this stock and 200 deep in the money call options? Check out this video because I'm going to break down the whole trade that they did and show you great ideas that you can use right now to create income for yourself. Hey there, I'm Michelle. This is the Cressivo channel and welcome back. This is where we talk all about options, selling puts, selling covered calls to create income to live yourself an amazing lifestyle. Now, the stock that Nancy Pelosi and her hubby just bought is Bloom Energy, and I've done a lot of videos recently on Bloom. Bloom is interesting because it's got this AI twist and it's super volatile, making the premium very, very fat for option sellers. Now stay until the end because I'm going to walk through trading ideas and I'm going to show you exactly the tools that I use to put my own trades in. So check it out. Here's what they did recently. They bought 10,000 shares of Bloom Energy on July 24th. Then they bought 100 call options expiring June 17th of 2027 with a $100 strike. They didn't sell options, but they bought them. Stay tuned, I'm going to walk through exactly what their thought process was. Then they bought another 100 call options and bought another 5,000 shares just a few days later. So you can tell they're super bullish on Bloom. This is similar to an Intel trade that they did recently. More about that in another video. Now first I want to go through a couple of quick fundamentals on Bloom. Their revenue has been soaring. In fact, they just marked a record quarter over $1 billion. And they've been accelerating 165% year over year. Now, AI is amazing, but it's not just chips anymore. It's about power, and Bloom is power in a box. Now, let's go through some great trade ideas. These are ideas that you can literally use right now. Let's hop into my platform, and I'm gonna show you click by click. And if you're not subscribed to the channel yet, make sure you do that because I'm putting up videos all the time, and you don't wanna miss out. Plus, you want to be part of my inner circle because I'm working on really big things for this app and trading in general. And I share those ideas with all my inner circle people. It's totally free. I'm going to drop the link right here. Okay, let's check out the trades. All right, so check it out. First, we're going to hop into the trade builder section of the app. We're going to first look at what the puts look like. So we're going to type in the ticker here, BE, and we're going to fetch the data. This app is so simple and it walks you through every step, click by click. Next, we're going to choose the expiration date. Now, me personally, I love short-term expirations. I'm going to look at a contract for this Friday, and then we can look at one afterward for next Friday. Next, all I do is choose the strike price. So the strike price is the price at which I'm committing to buy the shares if the stock drops lower. Now, I look at delta. We can see that with the little triangle here. Delta is like the cheat sheet way of how likely the stock is to drop from where it is to the strike price before the contract expires. Now, the lower the delta, the lower the likelihood, but also the lower the premium. So you have to find what's right for you. Now, the great part about this app is we could just keep clicking different things and evaluate them super easy. Let me show you what I mean. For example, let's look at a contract expiring this Friday. It's only a couple days away. And let's look at a 205 strike price. Now, right now, Bloom is trading at 216. So it'd have to drop a good bit. In fact, a little bit over 5% in order to require us to buy the shares. This contract is trading at $190. $190 gets dropped into our account right when we make the trade. We're committing to buy 100 shares if the stock drops below 205 before Friday. Our annualized rate of return is over 169%, super high because the volatility is super high. Let's say we wanted to go a little bit more conservative. For example, a 195 strike price. That only has about a 7 delta, so very, very unlikely to require us to buy the shares. It would have to drop 10% from where it's trading now in order to require us to buy the shares. And this last traded at 54 bucks. We're only putting up 19.5K in capital if you're not using leverage, so you're still making over 50% annualized rate of return on a super conservative trade. And here's the thing, guys. If the stock does drop and you need to buy the shares, cool, because then you turn right around and sell a covered call. In fact, let's look at selling a covered call right now. For example, if we were to buy 100 shares of Bloom right now and just turn around and sell an at-the-money call, let's take a look and see how much money we would make. Let's look at this Friday. Now, Bloom, as I said, is trading around 216 per share. So let's look at a 217.50 call, just right over what we pay for the shares. If we were to buy 100 shares, sell a call, and have those shares called away on Friday, we're literally making over 500% on our money. I don't know about you guys, but I think Bloom is an amazing opportunity. Now, here's what the Pelosis did. They bought shares long because they're very bullish on the stock. At the same time, they bought super deep in the money call options. In fact, those options had a $100 strike. So there was a lot of intrinsic value just baked right into that contract. They're not looking for income, but they're making more of a directional bet that Bloom will go up significantly over time. Now, most people hear the term, hey, they bought call options, and they picture buying a lottery ticket because usually that's the case. But in this particular trade, it was a bit different. Now, the reason why they bought 200 contracts is because it allowed them to control 20,000 more shares without having to pay the retail price at what the stock is going for now. You see, a $100 strike price when the stock is trading over 200 bucks, the option moves basically dollar for dollar with the shares. So you get the exposure without the hefty price tag. Almost all of what they paid is actually intrinsic value. It's real, already in the money value. Very little of it is time premium. And that is the whole reason that you would buy an option super deep in the money. In fact, it's like getting a margin loan without having to pay margin interest. Now, I generally don't go over trades like this on this channel because this channel focuses on creating income on a regular basis. And this isn't so much an income trade. This is a directional bet that the stock is going to go up significantly over time. But I thought it was super interesting, and it's always a great idea to learn and understand different strategies using options. All right, so what do you guys think about Bloom Energy? Do you like it as much as I do? What do you think is better, selling a put or just going long shares and selling a covered call? Me personally, I like to mix both together. I like to sell a put so I can lock in shares at a lower price, and at the same time, I like to accumulate the shares and sell a covered call right at the money. Now, if you want to see exactly how I do this, I'm launching a new course that's going to come out soon. I'm doing the final edits now. All right, anyway, I hope this video helped. If you don't have the app yet, man, you got to get the app. I'm going to drop the link here, and there's a 7-day free trial just to check it out. If you like the video, smash the like button, share it with a friend, and be sure that you're subscribed so you don't miss any of this amazing content. Thanks for watching. I'll see you in the next video, and in the meantime, happy trading.